Well, hello, everyone. Thanks for joining us for our Silicon Global show. Today, we're going to be talking about the metaverse. I think everybody is talking about the metaverse, or they're talking about crypto, particularly today. But believe me, this is not going to be a dull topic. And we have two really great panelists who are going to be joining us. You can see them here on the screen. James Lang from Liberty City Ventures. Hi, James.
Hi, Rebecca.
And we also have Marc Jackson from Seahorn Capital. And here you can see their pictures that I've been using to list the event. So there they are, and there they are kind of in person.
Hello, everybody.
In virtual reality on the screen. Yeah. I don't know. Is this kind of the metaverse where you're on your Zoom and then you're showing the faces in three different places?
3D avatars would put us fully in the metaverse.
Yeah, I think so.
Okay.
We're almost there. Zoom's the flat version.
Okay, so I think everyone's coming on and joining us now. And so let me introduce our panelists for this evening or this morning, if you're in France or the UK or maybe Israel or Hong Kong. We do have a global audience. We get people from all over. We've even had people from Mongolia and Vietnam. So it's really quite global. But anyhow, tonight or this morning, we'll be talking about the metaverse with James. And James Lang is at Liberty City Ventures here in New York City. He's on 5th Avenue. So I think you're not too far from me, James. What cross street are you at, James?
We're on 18th Street, right on the corner.
Okay. All right, you're in the heart of the kind of the techie space.
Oh, we're in the heart of Crypto Alley.
Crypto Alley. Okay. I know it as Silicon Alley, but now I guess it's Crypto Alley. Anyhow, okay. So James is an investor in companies building blockchain technology solutions and companies implementing blockchain technology. So I did like that distinction, so I got that. And I decided to keep it as your definition of what you do and what Liberty City Ventures is all about as well. And I noted that you are also an operations executive of several of the venture firm's portfolio companies, such as OTC Trading. I saw OTC a lot in your background. OTC Trading is a Bitcoin exchange in the US. I also noted that you were involved in COVID pre-check.
Yes.
During the pandemic.
So I came out of the traditional finance world, ran a successful hedge fund, and then joined Liberty City, which is a venture fund, helped them start up the first regulated Bitcoin exchange in the world. And we saw the power of blockchain technology, and blockchain technology is really the underpinning technology of the metaverse and of the future of commerce in the metaverse. And then during the pandemic, we looked at another metaverse technology called self-sovereign identity and tried to build a basically vaccine card and health status app. That didn't work so well because at the time nobody cared and everybody stayed inside. So, but it gave us some important learnings about privacy and identity, particularly as it applies to the metaverse and commerce going forward.
Okay, very good. And then I know I met you online through the Animoca Brands investment that Liberty City Ventures led, the $360 million investment in Animoca Brands out of Hong Kong at a valuation of $5 billion. So that was a huge deal. And, I also would like to explore a little bit about that with you and why you invested in Animoca Brands. But just to quote you from the CNBC article that I did on Animoca, where I quoted you, you said, "We see Animoca Brands as a leader in adapting new technology and ownership in the metaverse of your own identity and transactions in a more trustworthy way. The metaverse economy is happening first in mobile games, and they are in the forefront of this evolution." You're talking about Animoca Brands there. So.
Yes.
I presume you still feel that way.
Oh, definitely. I mean, we think that gaming is going to shape all the primitive of the metaverse. It's going to lay down the foundation for commerce within the metaverse, identity, and a whole host of other related, basically building blocks, the core that's going to drive it. And gaming's a regulatory light space, so there's not a lot of oversight. Entrepreneurs are free to innovate the way they really can't do in traditional financial services at the moment, or traditional commerce.
Well, that's interesting. Okay. So that will be one reason that they are kind of in the forefront of this evolution of the metaverse.
But there are a couple others, but we can go into those a little later.
Okay. And I also noted that you were New York through and through, at least from your education, Columbia and NYU.
Yes, I came here, and once you come to New York City, it's hard to leave, given the excitement and the people you meet and everything that's going on. So I think it helps to be a little bit at the cutting edge, and it's certainly true with blockchain. Although we might lose some people to Miami these days, but
yeah, the Bitcoin week was in Miami, right?
yes.
Yeah. Well, I guess it'll be in New York next year.
Hope so.
Okay. All right. So now let me see. We have Marc Jackson from Seahorn Capital. He's joining us today from France, but I actually met him in Los Angeles through various digital media circles and my own events with Silicon Dragon in LA. So when we were doing live events instead of online events. So anyhow,
I think I participated in a Shanghai event as well.
oh, that's right. Yeah, the Shanghai too. Yeah.
Yeah.
Yeah, boy, I used to do these events all over the world, and every other month I was in a different place, somewhere overseas and then back to the US and then somewhere else overseas. But yeah, thanks for reminding me, the Shanghai and LA. Okay, so I also noted a couple interesting things about your background. Of course, it's very blockchain focused as well, and the whole DeFi financial services, and you're a game economist and an angel investor. And so I think it's very interesting to have you join this session with James, in particular because of your quote here from.
Yeah, I have a bit of a different background. I mean, I came from the entertainment and digital and interactive entertainment side.
Okay.
I've been in the game industry for probably on the balance of about 25 years, and am now, I mean, for the last 15 years, I've really focused on financing both projects, so working kind of in the publishing sphere and helping kind of bring in off balance sheet or different types of financing structures similar to film industry or other project-based financing. I did that kind of 15 years ago until about kind of 10 years ago or so. There was a big phase where that was quite interesting for the industry. But since then, I've really been working through either to help video game development teams and talent start up their companies or spin off from bigger corporate entities and set up. And that's led me as well to work with a number of technologists, so not just purely content creators, but also video gaming technology companies. And I've been pretty actively involved in some startups in both the kind of VR, virtual reality segment. And I actually have a couple of investments in my personal portfolio there for VR gaming companies. And then when the blockchain kind of revolution started, I guess or at least the 2017 iteration with ICOs, I got very interested in how cryptocurrency and decentralized finance could assist basically the game creation and the gamer community, basically gaming culture. So I've been very actively involved in a number of projects since then, where I typically act as an advisor or even economist and assisting with designing systems in exchange for investment, in a discounted investment in some of the projects that I work on. So I say I kind of wear two hats. I come from the game industry, but I also practice, a pretty rigorous kind of financial advisory. I'm a registered broker, and um, so there you go. That's kind of my background. You want to
Okay.
talk about the things that I said about Animoca as
About
well,
the Animoca brand? No, I love both of
or
your
about
quotes, but
Facebook as
this,
well?
yeah, you said it about Animoca brands. It's a lucky, scrappy bunch from Hong Kong that's not been afraid to bet on unproven business models and get in at the right time.
Yeah,
And
I mean, maybe unproven business models and teams that maybe are pretty early, and
uh-huh.
they've had an amazing vision. I think James has participated in that. I'll stand by
Yeah,
that. They're definitely a fast-moving group.
yeah,
You look at the number of investments
yeah.
they make
And
themselves. I mean, I don't even know how they process and do all that due diligence. So it's pretty
they do
impressive.
have, I think they have a pretty large team on that, but yeah, but anyhow, and then your other quote here about Facebook's name change to Meta is seen as aspirational and doesn't mean at all that it will win. Another great quote. So thank you both for helping me out on that story and for being on this show. And then University of Michigan, the MBA Paris, HEC Paris.
Economics degree, which has been, like I said, very helpful in the last kind of
Uh-huh.
10 years of the game industry, because very often games themselves become video games, and the way their communities experience video games are highly driven by a specific economic model or system. And that predates crypto or blockchain as well. But it's extremely important now because the power of blockchain is in the relationships between players and participants in these new systems. So
Yeah.
it's
Okay.
helpful. I didn't ever think it would be this helpful. Let's put it that way.
All right. Well, that's good. I had a minor in economics, and I never thought that would be of help. I never, but I knew I wanted to be a journalist actually. So actually having that little bit of business background helped with what I'm doing today. Although I never really anticipated that. But okay. Now, for any of those who missed the article, there it is. And there's Yatsu there, the founder. CNBC Metaverse on why he's placing a Web3 bet against Mark Zuckerberg. So you can see the article there. Okay, let's see what chat we have going on. I would encourage you to ask questions. We already have some good questions in here. So why don't we get to those right away? Here's Hal Kelman says, hello from Palo Alto, 2 miles away from Mark Zuckerberg's Meta in Menlo Park. And then he wants to know, what are your thoughts on Roblox, a gaming company near me in San Mateo? Either one of you.
James, do you want to dive in, or I'm happy to respond as well?
Roblox isn't really in our core, but we see it as basically one of the companies that needs interoperability. As people, it's obviously very popular. People own assets in it, they make assets in it, and we think that it's going to be a core driver of adoption of blockchain technology, to have people have those assets they create in Roblox travel, and also to bring assets from other games into a Roblox format, and to see how, and that's really the technical challenge, is to get different sets of assets to render in a whole bunch of different metaverses. But we're not investors in Roblox.
I think Roblox is an excellent example of a community-based gaming phenomenon, where you have both communities and sub-communities that use the primary tool set, and then they create their own vertical kind of theme parks within Roblox. In fact, you have a whole class of investors, basically like developers, who develop only on Roblox. So they're third-party developers that are using the Roblox tools, paying the huge Roblox tax to exploit these. And the reason it works so well is because the community is so huge and so vibrant. And I think that that plus the fact that there is a, you know, an extremely sophisticated in-game set of tools and, you know, economic tools that allow for the exchange of items and you know, building and fostering game systems within the bigger environment, that is analogous for where, you know, I think Web3 and the metaverse, or Web3 in the sense of decentralized, you know, decentralized asset exchange. It's a very good roadmap for where we could be going. Roblox is completely centralized, though, obviously. You know, if we want to compare that to where I think one of the hallmarks of the future metaverse is the Web3 concept of it, of participants and players and creators owning what they're creating, or at least having, you know, the ability to own part of the system that they're involved in. Not
Well,
be,
go ahead, James.
And also to not have to pay big VIGs to the platform owners. And I think that's going back to Mark Zuckerberg and Meta. They're looking to take a huge rake off all the creation in their platform.
huge, shockingly huge. Like the recent numbers that came out are just,
what was it, 15% or what?
50.
Yeah, 50.
Oh my gosh.
Which I guess is, I mean, when you bring that into context to Roblox, which is, but Roblox is a richer system where there's much more a built environment. So a group of game developers can quickly get up to speed because they have so much richness and tools and, you know, a ready audience. So if you're paying 50% or more as a developer back to the Roblox empire, you kind of feel like the taxation, it's kind of like California taxes or something. You know, it's like, ugh, you know, we love California, but the taxes are high. Well, Facebook, I mean, Meta, that it makes no sense to anyone involved that they could be trying to raise a flag of saying, like, if you're going to come in and build in our quote unquote metaverse, you know, you're going to be paying way beyond the standard 30% that the kind of, you know, big tech platforms take. Right,
so
James?
is the metaverse
I just don't see people jumping on the "we're going to help Facebook" bandwagon, or Meta. I still call it Facebook. Apologize for the branding slip. But
yeah,
there's a big sense of community in the Web3 space and in the crypto space, and it's super important to them, and it's super important for people to be parts of these communities. And they're not really willing to contribute as much outside their communities or to enrich something that's they don't have ownership or, you know, equity, not in the, you know, stock sense, but equity in that platform.
That's exactly right.
so
I
is
mean,
the metaverse going to have more or less impact than the .com?
Oh,
Bubble?
I'd say way more. It's a
Okay.
revolutionary way of thinking and interacting. I think the pandemic's proved a lot about how people socialize now, and the metaverse is going to give people a forum to socialize with people they're never going to meet in real life. It gives a place for people to express their identity, express their interests, join communities, and they're going to be multiple metaverses, different forms. I mean, some are going to be hyper realistic, some are going to be, you know, blocks, some are going to be cartoonish, or some, you know, somewhere along one of these spectrums. And it's really going to change how commerce is conducted too, because it's going to move from .com, which is sort of, I'd say, just commerce delivery focused, to experiential. And so it's going to be interacting with your friends, interacting with artists in these experiences. And it's also going to be about interacting with brands to deliver experiences. And now you have a much bigger audience. You can do much different things with those audiences now that they're congregating in these metaverses.
Right. Yeah, that is an interesting aspect of it, is how it's really catching on with the branding and the advertising and the NFT aspect of it.
I mean, one of the biggest, much of the metaverse, as it were, or the metaverses, if it is a multiverse, already exist. I mean, Fortnite is, back to gaming examples, but Fortnite has become this multi-purpose usage. It acts, there's a very distinct game. There's a game that people come together. It's a multiplayer game where people, compete in teams, against other teams, and it's basically, it's a very, very complex game. But the people also congregate, and we've seen, tremendous amount of different types of activities in that congregation, whether it's, more like Second Life type, just get to know people that you are in other cities far away from in the real world, but you get to know them and see them regularly, even in their avatar form, but also going to major events like concerts with, major headlining artists. I think Sandbox as well. I think, James, if you're indirectly or directly invested in Sandbox, they also have, brands that are coming, and, it's from Snoop Dogg to Atari setting up on the corner. I think they have Binance and probably Fidelity now. I might be misquoting, maybe Fidelity is picking another one, but you get the picture, right? It's like people are staking out the land, and the frequented land in these new sections of the metaverse. But it's giving us a glimpse of what it could be like once we get to a fully elaborated commercial system, fully elaborated economic systems, when there's more stability in the way assets are, priced, how we discover prices, how all participants can, trade and share. We're getting there. I mean, we're still early days though.
Oh, we're super early days, but that's the real key, is how the assets are transferable. So if you don't want to be in one metaverse and you don't want to have spent a ton of money on a particular set of assets, and some of it's about flexing,
always is. Flexing's the natural part of being human, right? I mean, it's it can get out of control though a little bit, but we've seen that come and go in phases, right?
Exactly. And I mean, it's conceivable that you could buy a physical asset that comes with an NFT, and you'd throw away the physical asset because you have more friends in the metaverse who are going to see your avatar wearing that particular item of clothing. And that's what's important to you. And that's really, it just blows some people's minds that that's going to happen, but it's where people perceive the value to lie. And it's where they're going to end up moving and interacting. Not totally, but it's going to be a big portion of it, because they can, again, be in these communities of people who share common interests, or whatever the commonality is for their group.
So it will enhance both of those worlds then. Maybe.
Oh, without a doubt. And when people start traveling again, they'll go meet their new friends in new cities. I think it's just a fantastic way to socialize, because it's also, it bridges a little bit of space and time. I mean, another crazy concept is you can have avatars that have enough AI behind them to really replicate how you might interact in the real world. So you can set your avatar on autopilot for a little while, and it can walk around in the metaverse.
That's frightening.
Wow.
But it's going to happen. Probably is already. Is that you, James, or is that your avatar?
Talk about a split personality.
James is doing 3 podcasts right now.
Oh, that's wild. Yeah, they may not be in sync. They may not be in sync at all.
For me, I mean, an extension of this is that it's really an expression of community. I mean, Web 2, even Web 1, have shown us how people can connect in new ways. And that's where we're going. And it's been interesting to watch how many aspects of the current metaverse have accelerated because of the pandemic, because of the need to reach out in a non-physical way, or because travel was more difficult and more restrictive. But we're going to continue to see that, and I think the things mesh together. And the flexing and the signaling is all, the tribal signaling is going to continue as well. I'm selfishly from a gaming standpoint. I mean, I think we need to see more kind of robust trad gaming, like traditional gaming type experiences move in and benefit from the decentralized marketplaces that are the hallmark of Web3, and do that maybe in a more rational way rather than pure kind of NFT tribal signaling that we've seen. That's been a little bit, I'm not a complete, I don't want to suggest that I'm completely against the phenomenon, but it has been it's a bit of a distraction when you're looking at the potential power of creating these very sophisticated community-driven gaming systems. And a lot of the gaming culture doesn't like the fact that there's, kind of this raw kind of NFT culture of speculation run rampant. I mean, speculation is a necessary part of any kind of competitive system. I mean, there is a lot of speculation, but when it goes to the point where everyone's trying to get extremely rich extremely quickly, and it's all signaling, that's been in my mind, it's making it so that we have to kind of tread on eggshells when we're talking about building games and pitching games to kind of more traditional parties, because they immediately conflate it with the current kind of Bored Ape Yacht Club phenomenon, which touches a far smaller number of people who are extremely focused on that being the game in and of itself, rather than it being a form of entertainment around an actual kind of themed, elaborate game content. So sorry to rant there a little bit, but I'd love to hear James's response to all that.
I mean, my response is we've been pitched a lot of different game platforms. And the first question I ask the people that they tell me about the in-game economy, the play to earn. And I said, is your game fun? And that's the bottom line. Are people going to play your game? And they look at me like I have three heads. I'm like, I don't care how much magic internet money I can make in your game. Is it fun? Are you going to have new people, or is it just going to be people recycling their crypto wealth into your game?
Right.
And trying to make more money? And are you going to build a real community and just get people connected, having fun?
Yeah, I mean, and the thing is that there is a lot of speculation and creation of assets and things like that go into the game, but it's not just the game by itself. And that's, I think that thing that can be a turnoff to a lot of traditional game players. I mean, when you look at so many of the biggest game communities out there, modding communities that are around, MMORPGs and things like that, there's some very
You better define that. I know what that is, but some people, just tell people online what that is.
Well, like a massively multiplayer game, like, Worlds of Warcraft is the one that comes to mind for everyone. Worlds of Warcraft has spawned a huge, economy where there is a lot of flexing and signaling, and people, there's a lot of motivations for different participants. And at the center of it, though, everyone's there because there's a core game experience that's really fun. And it's not just the people that they're interacting with. I think if I contrast that to what's happening with Yuga Labs and with the Bored Ape Yacht Club, and they have created this phenomenon. It's a pretty amazing phenomenon of basically casino gambling with items that are not that unique. I mean, I guess they are kind of unique. I don't want to bag on them too much, but they're, they've created this culture, and then they're saying, but in the future we're going to be a club and we're going to have a game, but the game doesn't exist yet. The game is still basically, what's the floor? How do you sweep the floor? How do you get somebody to come in here and buy this for a greater price? And it really is all about the hustle and this very, very fast-paced, fast growth marketplace. And if that's not sustainable, I mean, what I fear is that the kind of those initial experiences, which are, pretty interesting, right? They could take away from this massive game industry. I mean, the game industry is like arguably $200 billion a year of consumer spending. And we want to convert as much of those experiences to a decentralized Web3 platform as we can, or platforms, right? We want to move it there. But gamers and game developers will be reticent to do that if they think that there's just this highly speculative, unregulated kind of, not so much unregulated, but just not a very, very competitive, fast-moving, cutthroat marketplace that where pricing goes so fast that they can't really participate. That's a lot of the gamers that I know. I mean, like you see this happening. Like when Ubisoft made an announcement that they were going to start moving some of their best games to, having blockchain-based elements, there was an uproar because of this NFT culture. In my opinion, it's like that's,
Oh, and certainly we're seeing exactly the same thing. It's from a game or brand perspective, you don't want to price your best customers out, particularly because there's this whole set of, well, maybe not after today, but whole set of crypto wealth that has been created. These are people who basically won at the casino, they're shopping at the high-end stores right across the street, and they're paying more than sort of the utility value for these things, and it keeps out the real users. So that's one of the challenges, is to have the healthy mix of crypto adopters to navigate the ecosystem, get people interested, and also be priced for whatever the asset is at the right price point so people will play and engage. And we saw this, just had a play to earn game, and it's I think it was out of the Philippines. And they weren't selling crazy, $1 million NFTs like Star Atlas. They were allowing people to sell, mods or skins for like 25 cents. And that's more of a healthy business model than trying to sell $1 million spaceship that might get blown up. I mean, who's going to risk their $1 million spaceship in a star battle?
it's a cool game though. You got to admit, Star Atlas is pretty. I mean, the thing is that the people building Star Atlas right now are super passionate gamers that have been there, and they're. I think they're thinking of how to balance the future so they don't run into those problems. But it's true that a lot of their assets. I mean, they're also creating structures where you can co-own the asset, like the spaceship, right? They actually have these like digital decentralized autonomous corporations, not organizations, but corporations that are going to be buying these spaceships, speculatively and then operating them. But I think, I think Axie Infinity, even though they might be struggling right now, I think they're making the right moves, but they have shown us that it is possible to balance an economy so that it can grow, where you do have an earning mechanism, which very often there's many types of gamers and that find a lot of entertainment in that. There's a lot of consumers that like trading things or creating something and reselling it to someone else. That's part of our nature as humans. It's like we just like to do that. Some people like to do, there's something for everyone in an elaborate game. And I think Axie Infinity did a great job of showing the path to the rest of the video gaming industry, the traditional kind of industry. We just have to get there in a way that's balanced and in a way that avoids regulation, because I do think there's, the NFT craze, similar to the ICO craze in the 2017-2018 timeframe, is going to attract more, regulatory kind of consumer protection focus now. So we've got to get past all that.
Oh, there's definitely a consumer protection aspect to it, but there's also a traditional financial system aspect. When you have $1 million spaceship, you can move $1 million of money around the world pretty quickly, in an unregulated, no anti-money laundering, no know your customer requirements. So, there's a potential for a whole bunch of nefarious activity to come into some of these games and ecosystems. So regulation's definitely coming.
It's coming. Yeah. So there's a question here. Is gaming the first frontier for metaverses?
Oh, we certainly think so. They're building all the primitives for the metaverse. Everything is being tested, whether it's community, in-game economy, interoperability of assets. There's probably going to be some standards set. How that shakes out, it's very early to tell. It could be some companies that are going to have a set of NFT type files that release the relevant specs to a different game engine. But it's definitely the first phase of the metaverse. And it's easy place. It's a low risk place for companies to engage, because if your brand does something wrong in a game, it's easy to recover and move on.
It's generational as well. I mean, when you, the Gen Z and millennials to a certain extent, but Gen Z definitely is, you know, games are one of the primary sources of entertainment, of community building, of, you know, the activity. It's an immediate thought activity. It's, you know, for us in older generations, it is harder to imagine how natural that is. So it's not so much that the gaming is the first part of the metaverse. It's, I think that the way that we're evolving, it's going to be just a natural course, that one of the key entertainment sectors is just obviously gaming. So, you know, it's, I think it's so much more natural for somebody who's in their 20s right now to just understand intrinsically or just implicitly what they, without any explanation, what the metaverse is. Whereas, you know, somebody who's in their 40s, you have to explain it to them, you know.
Well, even if you explain it, they may not get it.
You probably don't get it.
So what am I going to do in the metaverse? Question all the time. Well, there's a whole host of possibilities.
Right.
And a lot of it's about entertainment. Some of it's about commerce, and some of it's about community.
Yeah, there's a couple of questions here about commerce. What are your thoughts on the opportunity for direct to avatar accessory fashion labels selling direct to avatars?
That's
happening.
That's definitely going to happen. There are lots of there not lots, but there are many companies that are trying to do that right now. The challenge is really
who's doing that right now?
We ran into a small startup, DressX. They were looking to put fashion brands, and it's complex, depends on what kind of avatar you have. Corporations are somewhat wary of licensing their brands yet. They want to have their own strategy. They're intrigued. We're advising some companies on their metaverse strategies, how to bring your brand in successfully. And we think that's going to be through NFTs as a container for intellectual and brand assets. But this is coming. This is already on track. I mean, some of it's a question of solving the interoperability issues. Some of it's a question of making sure you have brand protection, similar to the way that YouTube and Facebook take down other people's copyrighted material. We're invested in a company that's looking to solve some of those issues, make sure that, you know, the right legal protections are in there for brands that are enforceable in the real world. Because certainly in the crypto space, there's this concept of code is law. And I don't think there's any judge sitting anywhere in the US that would see a set of computer code and say, yeah, I agree with you. No, it's going to be.
But you're seeing a lot of it going the other way, where you get the big brands that rather than fight it, they join them or acquire them. I mean, you've seen it. There's the RTFKT sneaker, virtual sneaker. They came up with like creating these amazing virtual sneakers that you sell as basically NFTs that can be, you know, cross-composable and attached to other NFTs eventually, and, you know, avatar. I mean, that's their plan. And after you know, this small startup, basically, I think the LA based, got bought by Nike, because Nike said, oh, we have to, you know, we have to be where, you know, the cultural trend is, rather than fight it by saying, hey, you stole our sneaker design, you know. And now they can now manufacture these like very elaborate, crazy sneakers in the real world too. Some of them, you know, so they've found there. I think there's both like the copyright protection approach. There's the, you know, figuring out how to do that, but there's also a lot of brands that are just deciding to bite the bullet and go for it. Clothing especially.
What percentage would you say are going ahead already?
I think any brand that's got like major exposure, like if they were a, you know, a brand that was advertising around games or around, you know, some of the cultural phenomena like Euphoria, you know, those types of brands are saying we have to be involved in, you know, some form of NFT strategy. So whether that's buying a small company that's got some, you know, that's doing some very innovative things that could match onto the brand, or whether it's starting their own division or hiring some talent to do it. You're seeing tremendous number, right? I mean, James, you probably know a lot more about this.
Oh, I mean,
Annie Mocha is one of the, leaders in figuring out how to cross invest in these small companies that are doing this.
pretty much every major luxury brand we think is exploring these strategies. We have companies that are working with a few of them, and some of it again is protecting your moat. Some of it is new avenues of commerce, but they're all fascinated by it. It's less, I would say, for sort of mainstream brands. I don't think you're going to see a lot of demand for, say, a Ralph Lauren polo shirt in the metaverse, because it's not that exciting, but unique items. And
What about an electric vehicle, for instance?
well, if you're talking about an electric Ferrari, yeah, I don't think you're going to see many Prius NFTs in the metaverse, even though they were, or maybe some Teslas. But I mean, there's
some Fiskars.
some
They're relaunching, right?
launching some Fiskars, some Rivians. But really, again, it's going to be some of that status flexing issue, rather than I need a Honda or Toyota in the metaverse.
What is flexing?
Flexing your muscles, showing who you are, bragging.
Flexing is an activity you undertake by, say, buying an NFT for $200,000 because you don't really care about the long-term value. It's just the ability to buy it and show your friends that you bought it.
Wow.
It's parking your Lamborghini in front of NFT NYC. That's what.
There you go. That's flexing with a capital F on that one.
Oh, I have to use that in my next article.
Yes, you do.
Yeah, I do. Okay. In the metaverse, here's a question. In the metaverse, why should I buy virtual land or virtual clothes for an avatar?
Well, the virtual clothes you buy because you like them. The same reason you would buy anything else. You want to use them. That's an easy one. It's something that you like. It's probably not going to be an investment. Not going to make you rich. Virtual land, we've advised some clients to buy virtual land as a starting point for their metaverse strategies. I probably wouldn't recommend it for speculation, but as a building block, the same way you would build your flagship store in Manhattan. You want to have a particular location, might be a particular district, might be a particular metaverse, and you want to be able to use that store to launch your strategy or that plot of land.
I see. And is there a lot of inflation in the virtual world too?
There's more.
There's inflation today.
Can you take out a loan to buy one of these things?
Yes, you can. DeFi is allowing people to do that, and then some other concepts about portable identity can lead to you being able in the future to take out loans in the virtual world.
James, what other innovations are you seeing, since people are coming to you and pitching you all the time? What other innovations are you seeing around the metaverse? What kind of business models or what kind of ideas?
A lot of what we do is sort of the core infrastructure for the metaverse. Some of it is basically wallet or custodian companies. Think about it as digital vault or your digital closet to hold your NFTs, keep them safe. Because part of the issue with sort of digital assets for non-crypto native is, one, they're scary. If you mess up, you can lose them. I used to run operations for the exchange. It was the scariest moment of my life, sending Bitcoin in transactions that couldn't be reversed, even though you knew that they were relatively safe. But it's scary to have the concept that you can't fix this once it's broken if you mess up. And then we're seeing other companies design, call them ad agency type models to design the experiences. Because again, we think that's the really important aspect, is to have good experiences in the metaverse. We've seen some basically virtual reality walkthroughs where you can, pick an object, much like walking into a showroom and pointing around, that's probably very, very nice. And there's going to be some use for that. But as an experience, that's kind of, there's a novelty to that. It's important for commerce, but it's not the most exciting thing that's happening. It's companies that are looking at the right experiences, whether it's a virtual party, whether it's a gated membership access to events, that sort of things, and then being able to communicate with these communities as well.
Okay. There's another question in here. We're getting a lot of good questions. This is from Brian. Which metaverse do you recommend to own land?
That really depends on, I'm a utility kind of guy. Depends on what you want to do. Each metaverse has different participants in it. You can look at the maps in Decentraland and see who's where. You need to figure out what's going on. Certainly not going to make any investment recommendation for property that's going up.
I mean, you can look at Sandbox and Decentraland are probably the most kind of well known, and they have strategies that are maybe not, they probably wouldn't think they're similar, but they're ready to receive large amounts of traffic flow in a kind of a real world sense, but become part of the metaverse where people are congregating. So you can carefully assess the real estate in those locations. Then there's the Yugo Labs, kind of Bored Ape Yacht Club land sale that occurred like last week. That's much more speculative, right? So I mean, I think you have to really know what you're doing if you're going to go into those kinds of situations. So I guess the only thing I'm saying there without any recommendation is that some types of land purchases for the metaverse are much more clear cut now because they're more mature. They've been going on for a while. They have a coherent strategy. You can actually say, you can look at the way they're laid out and decide what their value is. Others are much more kind of like, well, in the future, we'll have a world to navigate and there'll be a gameplay there, but but that might be very valuable as well. So who knows?
I take it from the way you both talk that you're both very much avid gamers. Am I right on that?
I mean,
how many hours do you spend on a day?
I mean, I don't spend that many hours playing games. My game is kind of working with game developers who are creating games and working on specific, like right now, like I'm very, very involved in like kind of 2 gameplay designs that are, it's not me doing them.
I mean, just for your own personal.
For my own personal pleasure. I don't know if I have time to do that. I don't have as much time anymore.
Oh, but you have to do it because you have to know what's going on out there.
Well, what do you play, Rebecca? Come on, do you play any games?
I'm not a gamer. I'm not a gamer.
Come on, do you play some casual games or some hyper casual games just to listen up?
Zero.
Yeah. No Candy Crush?
No.
Come on. Really?
No.
Well.
Nothing. I'm a news hound.
See?
I'm very much into news. Okay, Marc.
I mean, with the amount of time, James is probably
Wordle.
like this.
I don't play Wordle either.
Yes, you do. You play Wordle.
You
must play Wordle.
I see other people do. When I see the New York Times and they have the answers to Wordle on it, when I read the New York Times, they always have that at the bottom.
I mean,
right?
I wish I had more time to play. Right now, the blockchain, DeFi, gaming, GameFi, like the future Web3 world is moving so fast. It just, I end up spending a lot of my free time just kind of catching up on what's happening. Is that true, James? You probably have the same phenomenon, right?
Oh, I have zero free time, and the universe is just expanding.
Yeah, it's expanding so fast.
It's moving so fast, and plus my son beat me at all the console games, so I'm like vanquished from the game.
My son does the same thing. So plus he works in the game industry, so and he's like really good at VR games. So anything fun that I want to do there, I'm going to be slaughtered. I think that's probably the last big gaming session that I did a couple of months ago. It's like playing a series of all these like new cutting edge VR games, and that is metaverse stuff. I mean, you're completely immersed, playing, whether they're music games, rhythm-based games, whether it's like these sophisticated shooters where you're like running around in like these amazing environments. I mean, that's just telling of where we're going.
I have tried virtual reality with what I call the headphones, going under the hair dryer is what I call it.
Going under the hair dryer.
Yes.
The Zuckerberg hair dryer. There
Yes.
you go.
Yeah. Okay. There's another question in here. What do you use as collateral to get a loan in the metaverse?
Use other crypto. So, I mean, the best collateral, is basically stable coins. I mean, people like to use USDC, but you can use Bitcoin, Ethereum. And there are a bunch of DeFi sites for you to be able to do that. But pretty much from a collateral perspective, it's the same sort of risk weightings in any of the pools that you enter. It's the same concept as a margin loan in a brokerage firm. You're going to put up the collateral. They're going to liquidate it if the price drops.
Okay. James,
do
you have a
your own
question?
research.
I see James Zarega on here. Do you have a question? Or Tom Zarega? Tom Zarega is on here. Do you have a question, Tom? You raised your hand before, but I didn't. Then you disappeared. So, okay. You could put your question in the chat, or the Q&A box. Just put it in the chat. We'll get to it. So let me have a little bit of fun with the poll. Our usual poll has 3 questions, and we will let James and Marc also respond. I don't think you can see it on your screen, but the other people, attendees, can see. So the first question is, and these are rather silly questions, but do you know what the metaverse means? Yes or no? James and Marc, do you know what the metaverse means?
We're not allowed to participate, apparently, but
You can voice your opinion.
Well, what I'd say to question 3 is you don't have all of the above.
Is the metaverse hyper reality is one of the questions.
I mean, it's a bit of both, but we're at early stages. There are going to be lots of exciting things that shake out of this, but we think it's reality here to stay.
Reality here to stay. Oh, okay.
And it's art imitating reality, imitating art, right? I mean, this is like sci-fi writers like Neil Stephenson, who imagined where we would be right about now, and so many of the elements that they were discussing, there's several terms, not just metaverse, for what's going on right now.
Yeah.
And they're coming true. So there's some hype there for sure, but there's also grounded science behind what's happening, science and human evolution. So
all right, those on the poll are split on that, a little bit more about hype, weighing more heavily.
I see Tom's question in the chat is, there are many different metaverses. There are going to be some metaverses that you need a VR headset. There are going to be some metaverses where there's haptic feedback. We've seen, sort of sonic feedback. We've seen device feedback for people. And then there's going to be metaverse that you might just control with your keyboard. There's going to be different levels of that, or even just a regular sort of game controller.
Yeah.
Or even your phone, just moving around on your phone. They're going to be different.
Just looking at your screen on your computer when you're navigating through a kind of a video game like environment. It's really what you're doing and who you're meeting there, and how how it's happening, and how important it becomes to people.
Well, what percentage of the public do you think will participate in the metaverse? That's another question we have here. What percent? Now versus 5 years from now.
Now I think it's going to be, early adopters, maybe 10%, but we're going to see this happening, maybe not entirely from a US driven standpoint, but we're going to see this driven a lot out of Asia. They're going to skip some of the intermediate steps and go right to this, the same way, sort of in emerging markets or emerging economies, to skip the landline telephone phase. This is going right into the metaverse.
Yeah.
I think just again, back to demographics, I think that 5 years out, we could be very close. We could be closing in on 50% faster than we think. It also depends on how you're defining it. I mean, if you're talking about people like being able to participate and possibly earn a living in kind of a metaverse environment because they're either undertaking some activity, trading activity, etc., like, a play to earn type mechanism, then, they might have a very rudimentary kind of interface, but they're still participating in the metaverse. So it doesn't all have to be goggles and, kind of Ready Player One, Spielberg graphics, right? It could be happening in a crummier, dirtier way for a while.
Well,
But I
on
do
your
think that
mobile phone.
sure, absolutely.
So yeah, I mean, how about just if you're just walking down the street? I remember the Pokemon thing, where this virtual reality character was just appearing everywhere.
I was at San Diego Balboa Park like last year during the pandemic, actually, like just last year, 2021.
Yeah.
And we didn't know we were there. We didn't realize it was a Pokemon event.
Oh,
I mean, it is just Pokemon Go. It is incredible to see those people going at it. Like they could care less about the beautiful park and the zoo or whatever. It was like all about the Pokemon, but they're getting together, and you can see it's a very interesting phenomenon, right? It's very metaverse.
Yeah, it is. And do you think that this has been accelerated because of the pandemic, that we've all been locked in, on our screens or whatever device?
Absolutely.
Yeah.
Absolutely.
Okay. All right, now let's see. What are your thoughts and perspectives on sustainable economics in gaming and tokens? Thank you, Brian. Good question.
Well, I mean, as I was saying with my little mini rant there, I mean, I think we need a bit of a correction with the kind of over exuberance for kind of this two-dimensional gambling culture around NFTs, because a non-fungible token is actually a very vital kind of programming element that can be part of a more sophisticated economic system, which I'll call a video gaming, like blockchain game system. And they've kind of got a bad rap. We might have to just call them all digital assets from here on out or something for gaming, because the NFT culture is like, what is an NFT? I mean, it's like it's like the meme where you have DiCaprio like going like, sell me this pen, and it's like, it's an NFT. It's like it's become this cultural thing where people just kind of describe it as something you don't understand. For hardcore like programmers and designers and architects of the metaverse, of Web3 or of gaming, that's not at all what it is. I mean, an NFT is a type of artifact, digital asset that becomes part of this bigger system. And it doesn't necessarily need to signal like speculation and this culture of flexing and culture of kind of wealth signaling or other signaling. It can be something else. So we'll have to get around that. I think that's part of the answer. That's not a technical answer of how do we get to stability. I think that one of the things I'm very excited about is seeing the amount of like tools development, very specifically for designing kind of what I call hybrid gaming, where you've got trad gaming meets, GameFi, where you've got traditional games that take a lot of effort to build, that take a lot of careful patience and balance, that are then meeting their communities, creating communities of gamers. We need a lot more tools to, for instance, discover pricing or manage economies, managing the micro level monetary policy of a dual coin system or things like that. And there's a lot of people working on those problems, and that's really exciting. When that's where I get really excited, is when I meet with people that are doing some amazing things in those areas, because I think that gives me hope that we're going to get to a balance to where you can actually have these progression loops in a game where people are they're playing a play to earn, play and earn type of things, where the game itself is still extremely fun and many participants are getting enjoyment, are getting entertainment value out of it. So hopefully we're going to get there.
Yeah, good.
That answers that
Good,
question.
James. Yeah, that's great. James, any final comments?
I think it's sustainability. It's a flywheel. There's going to be external real capital coming into these games, not just crypto capital. There's going to be a need for this whole set of infrastructure build that's going to be built by the game developers, and their tokens are going to power that. In the short term, I think there's going to be reliance on stable coins to power some of these in-game economies. And that's going to be translatable across basically the world.
Right.
So there's a less speculative aspect to it because real companies want to make real money, and some are willing to hold a crypto asset. Others, you'll see their crypto strategy is to just immediately convert the crypto asset to basically a fiat equivalent. And as things that flywheel keeps moving, you'll see more corporations willing to hold and have the mindsets to hold these crypto assets and understand the real value of them as well.
Very good. Yeah, we didn't even
Excellent
get
answer.
to talk much today about crypto, which was a big day today in terms of valuations and all that. But next time. Anyhow, really, that was great. I really enjoyed it. I had a lot of fun. I learned something as well. I hope everybody else did. And so I hope that you'll come to our next show, and which is, let me just scroll to it. There's Yatsu again. We did our poll. Our next show is June 1, again, a Wednesday. I decided I like Wednesdays. Finian Tan, Dr. Finian Tan, is with Vickers Venture in Singapore in the US. His claim to fame, he has a couple of claims to fame, but one of them is that he's the fellow who actually called the shots on investing in Baidu, which was a whole nother generation again, but China's search engine that's now into AI and electric vehicle or self-driving vehicles as well. So that's Finian. I understand that he's also the character in the Crazy Rich Asians, based on him. So when you're the first investor in Baidu and you hold on to it to the IPO, that gives you an idea. So he's on June 1st, 4 p.m. Eastern time, because believe it or not, he's going to be joining us from France.
Cool.
Okay. Yeah.
Excellent.
Cool, right?
Excellent.
Yeah. So, all right. So if you like this event, please join our Silicon Dragon Circle so you can come to all of our events. And I really appreciate all those who have joined us along the way. And thank you to Invest Hong Kong for helping us host these shows. Really appreciate it. There's a little bit about me. If you want to know more about me, just go to my website, silicondragonventures.com. Okay, well, look, I had a great time, and I think everybody else did too. So thank you again. And I appreciate it. And thank you all for the great questions. So we'll see you next time. Maybe we'll have you back on to talk about crypto. Would that be okay with you?
Oh, that'd be great. I had a
Great.
great time. Thank you for having me on.
Okay.
Anytime.
Okay.
Thank you so much, Rebecca. Thank
All
you,
right.
James. It was really great to meet you, and be well, everybody.
Bye. Be well.
Okay.